It doesn't matter why, because I really believe that the stock market is for anyone and everyone willing to take the time to hustle, willing to take the time to allocate a certain amount of portfolio that they have, that they can use to actually win and actually try and actually do it. And that's how you win. You win when you risk, you win when you start to allocate and do the amount of work needed to be able to help you to win in life. Hi everyone, Merry Christmas to all of you. Hope you guys are good and well. Hope you guys are enjoying this holiday season. Over the past few days, since the market closed last Friday, I got a lot of questions asking how should you position, trade, and win for 2019. So let me answer this in just a few minutes, so at least give you a perspective while we are closed. While the market is closed, it will allow you to also retune and refine and also plan your year out. So by the way, the market closed before the Christmas break below 7,500, which means also we are below the strong 200-day moving average, which I mentioned will turn our markets into something that's bullish. So please remember, I mentioned that we have a resistance at around 7,570. We tried to break out of that resistance a few days ago. It actually went up but failed to hold its ground. So now we are still below that range, meaning that will reinforce itself as a resistance altogether. So how do you trade this and how do you actually spin and win in all of this? As you all know, from the start of 2018, the market was battered, meaning, now I'll segment this. If you're a quick trader, you don't need to look at this because you can make money in whatever situation. Or if you're buying at support, selling at resistance, buying support, selling at resistance, it's supposed to be okay. You're supposed to be winning regardless of where the market is headed and regardless if the market is cheap or expensive. So this video is basically segmented to position traders and investors, and if you've been following the thesis of how I would trade, this is not new to a lot of you guys. So first of all, if you're an investor, the goal is, number one, to find the stocks that have been battered down. In the market so far, the most battered are the banking stocks, because a lot of people were thinking that since interest rates will be higher, banking stocks might not be as good because people might not get a lot of interest or loans next year. Please remember this also please remember this also that in terms of housing loans, I've seen housing loans come up from around 5% to 9% already. So that's a big swing that might not encourage a lot of people also to take out loans. But of course, people who are needing and wanting to get a house already, they'll probably get houses still, or those who are currently paying their loans and then their loans will suddenly adjust to something that's higher. They're the ones that will, I guess, get the blunt and get hit also the most. So from that perspective, that's why a lot of people are not as bullish in banking stocks. However, it being battered down, their valuations are so cheap. A lot of the PE, PB ratios already are showing that at a certain point in time this year, especially when the market was battered, banks were pretty much down and battered. I've also mentioned this in previous videos that the banks like Security Bank and PDO are very, 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 very attractive from where they are right now, and that's what's amazing about it. You get to win when you spot opportunities like that. So the first criteria is it should be battered, probably below more than 20% down from its peak. So the larger the battering, the better. The larger the drop from its highest point, the better it will be. So that's one. Number two is you look at the valuations. If the valuations from PE and PB, depending on how you want to analyze it, denotes that it's cheaper, then go for it. Then number three, you can compute for the fair value for 2019. If based on the fair value that you've computed, based on the methodology that you've used, that it's low and it's undervalued, then go for it as well. So that's number three. Then number four is this. Very, very important for me is growth. No matter how battered the company is, if the growth is not there, the company is not growing, the company is not increasing the sales, and the net income is not doing so well, then I'm gonna stay away from it. It doesn't matter if it's battered, if it's not growing. You want something that's battered and growing as well. So there. So those are just basic things. Of course, if you want to be an investor, you have to place a very, very large amount of how do I put this? You have to place a large amount of interest in fundamental analysis, because at the end of the day, it's the fundamentals and the valuations that will drive the company higher. So meaning drops like what we saw is something that should push you to be able to analyze and win because you'll be able to buy stocks that are very, very cheap. But you have to escape the emotion of it. The scariest thing is a lot of people get scared, since when they're scared, they try to stay away from stocks that are ridiculously cheap and discounted as well. So next, if you're a position trader, same rules, fundamentals should be there, but look for stocks that are now starting to reverse. As of this point in time, there are some stocks that have started already to break out from the downtrends and have started already to push from those initial resistances. So look at those stocks. Look at those stocks, especially if you are using moving average. Use the long-term moving average as a point for you to decide whether it has already broken out or not. So that can be a tipping point for you. Stocks that have broke out from those levels, those are something that you need to look out for. Those are stocks that you need to watch out for, whether it will be something that will reverse or not. The trick down there is this: when it starts breaking out of those 200-day moving averages, if it fails to hold and you started to buy, you must sell. You must cut loss if it does not hold. You have to remember, similar to what happened to GT Capital at some point, it tried to break out but did not hold. But if it stays above that and breaks out of that and stays above that level over the next few days, then it's worth holding and even buying some more. So that's my thesis into all of this. If you are a position trader, place a big preference on the 200-day moving average, place a big preference on reversals. You must know also how to draw the trend line. If it's very, very clear that it has escaped the long-term trend line, similar to this, I've been talking about GT Capital last year and months ago that it's been in the long-term downtrend. However, because it broke out from that long-term downtrend, it broke from those significant resistances. Look at it, while the market is down, it's the one that's pushing up, and that's how you win. You just pick stocks that have been battered but have started to reverse, and then you buy them and you position, and then you hold it up until it continues to go up and up and up and up and up and up, and hold them up until they start to reverse and start to go down as well. So that's it. It's Christmas. We're still here in Boracay. Expect more videos here as well, because again, the goal of all of this is to help you win in the markets. That it can be done, that regardless of where you are, what you're doing, what your business is, what your work is. If you're an OFW or a stay-at-home mom, it doesn't matter. Why? Because I really believe that the stock market is for anyone and everyone willing to take the time to hustle, willing to take the time to allocate a certain amount of portfolio that they have, that they can use to actually win and actually try and actually do it. And that's how you win. You win when you risk. You win when you start to allocate and do the amount of work needed to be able to help you to win in life. And if you don't have skin in the game, guess what? There's no game at all. And I encourage you, for those who are employed and have a certain amount of bonuses this year, instead of buying that iPhone, instead of buying that Apple Watch, instead of buying that item that you may not probably need, use it first to invest. And once those investments start earning, that's when you enjoy the stuff. That's when you enjoy buying the stuff that you don't need. When your investments, your assets are working hard for you. Do not waste your money if it's all active income and you're buying stuff. I'm not saying it's bad to enjoy. I'm just saying that at a certain point in your life, you will need to deploy and build as much assets as you can, so that as those assets keep on earning, you can now enjoy and do the things that you want. Again, investing gives you the ability to live life at your own terms. So I hope this video helps you, and I hope that we see a larger and bigger and better generation of Filipinos investing in the market. So this is Marvin Germo from Boracay. As you can see, it's a bit cleaner now as compared to where it was before. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys. Bye bye.